We have 10 hubs located in Nigeria. We have corporate innovations whereby we host tailored programs to help these innovations and startups stay ahead. We also support our founders with help on guidance. We have venture support for founders that help them to transform their ideas from just basic ideas to actually, MVP stage and all those kind of things. We also have investment assets that helps to connect startups to local and global funding. We also have we also operate on ecosystem development, whereby we build stronger innovation communities. For more information about what we do at Opolo Global, you can check us on our website at www.opolo.global. All right, moving on quickly, we have the Opolo Collective. Basically, the Opolo Collective is actually what brought this event to us today. Special shout out to the Opolo Collective. So the Opolo Collective is an invite-only community for founders, mentors, angels, and VCs. It's a safe space for peer-to-peer founder support, masterclasses, skill sessions, investor introductions, access to partner pegs and resources. We are primarily focused on helping founders to not just build, but also to thrive and to scale up whatever it is they're doing. If you want to get access to the Opolo Collective, you want to be part of what we are doing. This is not just what we do at the Opolo Collective. We have a number of things that we do, but this is just one of it. If you want to be part of what we do at the Opolo Collective, you can request access at www.collective.opolo.global. All right, moving on to the MVP of why we are here. Ladies and gentlemen, our speaker for today is Saeed, and Saeed is the investment manager at Oui Capital. He leads full investment cycle from sourcing and evaluation to execution and post-investment support. He manages portfolio companies by providing strategic and operational guidance, oversees funding administration, LP reporting, and he also conducts senior research to refine investment thesis. Saeed also plays a key role in managing investor relations and driving the development of Oui Capital investment team. He brings over 6 years of private equity and venture capital experience. Wow, I should be seeing some virtual hands right now, with a track record of executing transactions, exceeding a cumulative $200 million across sectors such as manufacturing, technology, and renewable energy. Prior to Oui Capital, he co-founded Hadi Finance. Please pardon me if I didn't pronounce that correctly, a tech-enabled inventory financing platform supporting informal traders in Africa, and holds investment roles at Eco VC, Sahel Capital, and Vera Capital. Saeed is very skilled in financial modeling, valuation, due diligence, and fundraising. And on top of all of this, he holds a degree in chemistry he holds a degree in chemical engineering from the University of Huddersfield. Ladies and gentlemen, with a show of hands, please help me welcome Saeed from Oui Capital as he takes on the floor with Joba. And I'll also be bringing on Joba on board. Joba is our Global Innovation Entrepreneurship Officer at Opolo Global. So please allow me please allow me bring this gentleman on board as we,
Awesome. Okay, can anyone hear me?
Yes, I can.
Okay, I can see just myself. Good to see Saeed here. Okay, great. Awesome. Hi, Saeed. Nice to have you here again. How's it going?
Yeah, everything's going good. Thank you. Thank you very much for having me and for making the time out of a busy Thursday evening to host this.
Absolutely. Yeah, I mean, it's good to have you here. I think, Blessing, you can stop sharing your screen now, just so that we can just go right into it. Awesome. So yeah, really great to have Said here. I mean, this has been long coming. I think we had tried to see how to really put this together for some time now, but I'm glad that we can finally, have this chat, right, for the founders here. And speaking about founders, it's quite interesting to know that I'm not sure if it was written in your bio, but you know, maybe many people here might not know that you were once a founder yourself, even quite recently, right? And is this correct, by the way, Sai, just to be sure?
Yes, yes, that's correct. That's
Awesome.
correct.
Awesome. So yeah, before joining We Capital and going into investment, so I think it would be good, right, to just sort of understand what, motivated this shift at this point in time from being a founder. I mean, the people here, you used to be like the people here who are listening to you right now, right? So what's
Definitely.
motivated that shift, right, from being a founder into this space at this point in time?
Yeah, I think that requires me to go back a little bit in time, just talk a little bit about my background. So born and raised in Nigeria up until the age of 15 when I moved to the UK permanently. Um, I went to secondary school in the UK and uni in the UK until I decided to come back to Nigeria at 22. Now, truth be told, I think because of the way I grew up in a very proud, Nigerian household where stories were quite big, in terms of learning about the history of, for context, I'm from Edo State, right? So learn about the history of the Benin Kingdom, the Auchi people, African stories, so to speak, that filled me with pride. And I think coming as a 15-year-old to the UK, I think I was very surprised by people's perception of us. You know, Ah, the whole narrative of we came to help to what's the word? We came to save you guys. Give you technology, give you this, give you that. That did not gel with my own internal understanding of who we are as Africans. So yeah, that conflict existed, and for me, um, I kind of fell into finance a little bit, like the bio said, I studied chemistry and chemical engineering at Huddersfield. And but even before I went to uni, I've always been very entrepreneurial. So I always wanted to start a business. Back then I didn't know what a business was, but I wanted to start something. Right. So I started my first ever business was a football website, right, which actually got quite a bit of traction in India. And it was called Share Football at the time. Um, and I always knew I wanted proximity. So after I did my NYSC at Dangote Refinery, I was a junior process engineer, right? I knew, and interestingly, I moved back in 2015, and that was when oil prices crashed. So it kind of just happened because I was also looking for an industry that essentially could give me a level of security. Because I've seen guys who, came back a few years before oil and gas, want to come in and start raking in the millions. You came in within your first 6 months, prices has dropped, they've sacked you,
Mm,
right? So to my reasoning at the time, as a 22-year-old, I'm thinking, okay, this finance thing, I like business, right? I want to learn more about business. I need a front row seat into learning about how people build businesses together so that when I'm ready, I will, go out and start my own. So that's kind of how, and then I also wanted that security. The way VC PE works is that you get your fund committed, right? So as such, your salary for the next, 5 to 10 years is, your salary for the next 5 to 10 years is guaranteed.
guaranteed.
So coming from that oil and gas situation, I wanted that guarantee, right?
Mm,
Where I'm not subject to the ups to vagaries of economy, right?
mm,
That's how I found myself in finance. So it was as a result of an interest in business and a willingness to learn. So 2017 started at Verod Capital,
mm,
so private equity, focused manufacturing, that sort of stuff. Manufacturing, education, renewable energy. I was looking at guys like Solinta back in 2017, right? I was in Verod for just over a year before I moved to Sahel Capital, which is an agribusiness focused private equity firm, right? Again, part of my job, deal sourcing, evaluating deals. So really, my entire career, 2017 to 2019, was really a trial by fire. I didn't know anything about finance, pushed me straight in, and it's sink or swim. You either learn or you get kicked out, right? So, you know, getting that front row seat, spending time with, I used to travel to Kano, travel to Oshogbo, travel to different parts of Nigeria, just helping founders build their businesses. And for me, that was what I wanted to do because eventually I wanted to be a founder myself, right? So as such, I wanted that proximity. What do these guys have in common? What are they thinking about? How do they think about problems, right? And that's how I found myself in finance. And then in 2019, it was early 2019, I transitioned into VC with Echo VC. Again, doing the same thing, spotting, high quality businesses early on. I'd already built the skill sets in private equity, but VC is a different game, right? The way you think about investments are a little bit different. So yeah, I did that 2019 to 2022. I worked at Echo VC as an investment associate before I started Hadi Finance. And Hadi was my first real step. Okay, I feel like I've learned, 2017, 2022, I've learned a lot. And let me try it. Let me try it out. I saw Shiggy. Let's put it that way. I saw Shiggy, you know, uh, it's tough. It's tough. Building a business in Nigeria is extremely tough, right? So in earlier this year, in March this year, I stepped down as CEO of Hadi Finance. My co-founder runs that business now, and the business is still thriving. And I think we'll talk a little bit about, SMEs versus venture backable businesses, further down this conversation. But yeah, that's in May, I joined Oui Capital. That's how it's pronounced, right? As investment manager. And yeah, the rest is history.
Interesting, very interesting background, really. So I always thought that it was more of being a founder for you before you eventually then moved into,
No.
the investment side. So not knowing that you had been in finance, right? Learned all the
Yes.
ropes, investing and all of that from PE all the way down to VC. But that sounds very interesting, really. And I think there was something that you said that sort of struck me. You said running a business in Nigeria, you saw Shege, right? And I mean, it's crazy, right? It's crazy what businesses in Africa generally really have to go through, right? In terms of building a business. But I think that it would be good to really get, I mean, that was like 2 years, if I'm correct, 2 years of you doing business,
Three.
3 years of you
3 years. Yeah.
right? So you came into the business with the perspective of a fund manager, a finance
Yes.
person, right? And did that sort of help you with
Oh,
raising a fund, or not raising your raising a
raising
round?
capital. Yes.
Exactly. That sort of help you, at Hadi Finance.
Oh, like I over 100%. Yeah, because one of the things I think there's always a founder VC
Mm.
disconnect. A lot of
Mm.
founders, because not every founder is going to be a VC naturally. Um, very few of us, very few VCs actually end up being successful founders. It's a very interesting statistic you would think, right? But it requires completely different skill sets, right? But truth is, as a founder, what coming from VC helped me do was help me understand what it is a venture capitalist would want to see in my business for them to fund. So I was thinking of Hadi Finance as how I would see it when I was at VC. You know,
Yeah.
what shows that the founder is ready? I need to have that. You know, getting my data room, my projections, my pitch deck on point, thinking through the questions that I will be asked. Like, I don't think throughout and by the way, fundraising was like, I say all of this, but fundraising was still extremely tough because I started Hadi Finance when everybody ran away from Africa in 2022, right?
Yeah.
During start of the drought. I suspect if I had started that business maybe a year earlier, in terms of fundraising, it would have been much, much, much easier. But that being said, I knew what VCs wanted to see. And throughout my time fundraising, I was always over prepared for every single interaction I have with it because I knew the questions they would ask me, right? And I made sure I was prepped ahead of that.
Very interesting. So quick question, right? Now, does this mean that because from everything you said, it looks like you're able to eventually raise money, raise capital,
Yes.
right? Does it mean that money isn't everything, right? Because I mean, you are back in the investment world now, right? So does this mean that money really isn't everything for a startup, for a business generally? Can you answer that?
Yeah. So for context, how many businesses do you hear of in the industry that's raised north of 100? I don't mean just in Africa, north of 100 million, and they
Hmm,
died.
hmm,
I personally have there was a Canadian company. My last deal before leaving to start Hadi Finance was a Series B,
hmm,
right? For a Canadian company that also had rails between China and Africa, which was why it fell within our remit. Right.
right.
These guys raised $120 million, and I was leading that, I led that Series B round, corralling all the rest of the SPVs, the other investors, leveraging on my diligence.
Hmm.
By the time I stepped down as CEO of ID, that company was dead. Of
Wow.
course, money isn't everything.
Wow.
How many African companies, come on, we all read the saying, I'm not gonna, make the rookie mistake of calling anybody out on this fireside chat. But how many companies do we read about raise 50 million, raise 80 million, 20 million, and they've quietly died
Hmm,
they've died a quiet death, and you kept it quiet until maybe one article comes up 2 years later, all sorts of
hmm,
upheavals, right? Money is jet fuel. Money,
hmm,
if you are if you are heading in the wrong direction, money will help you get there faster.
hmm, hmm. That's very interesting. If you're heading in the right direction, money helps you get there faster. So now, in that case, now it'd be good to understand something. Now you've gone to the other side of the divide where you've experienced what it looks like, right, to start a business, to run a business, right. So now, in your position as an investment manager, right, it would be good to understand how or what your experience as a founder has taught you, has opened your eyes to see when you are now assessing early stage deals, right? I'm sure at We Capital, you definitely, work on early stage deals, right? So, what has your experience running Hadi Finance? What has it really opened your eyes to at this point in time when you want to really, assess early stage deals?
Yeah. So it's interesting, right? Because I actually thought being a founder would make me a better investor. It makes me a different investor, not necessarily better, right?
Mm,
Because the biggest takeaway I have now, two
mm,
big takeaways I have now, I think they're linked to each other. The first is empathy,
mm,
right? And the second is humility.
right.
Because I will tell you who I am before I started Hadi, before I had seen the Shege, right? To understand the grit required to actually be a founder in Africa. It used to
Mm,
just be, what was your month-on-month revenue growth? How many
mm,
customers do you have? I'm not trying to delve too deep inside. But now, you know,
mm,
I'm a lot more empathetic.
mm,
I'm a lot more um humble. So for example, if a founder gets $30,000 in revenue a month, right?
mm,
Honestly, I respect them. You
mm.
get $15,000, it's hard.
It's hard.
It's much harder than Silicon Valley or anywhere else. You understand? However, on the flip side, though, as an investor, I don't have that luxury because there are
Mm,
people that I want to give them money because I'm like, "Ah, you've hustled, you've tried, you understand, but I can't because at the end of the
mm,
day, and there's something that I will probably reference a lot during chat as a VC and even as a founder, one of the things that you always have to ask yourself is how big can this be if everything goes right?
mm,
So you see companies that are getting to 10,000, 20,000, 30,000, growing fantastically, right?
mm,
But their ceiling is capped. Maybe as a result of the market they play in, maybe as a result of the products they have,
mm,
right? Maybe it might be a lending um, platform, and they're capped by the amount of debts they can raise, right? Um, so you can't be too empathetic as much as you want to be, right?
mm,
So for me, as a VC now, so I think what has changed in the way I evaluate startups now is that I'm a lot more human. right? But it doesn't change. Like I will take time out of my day to give people like advice. Look, this is the way you should be thinking about this. Sometimes the advice you will not even want to hear. Sometimes I've told someone, a founder, chairman, this is your business, shut it down. I've told him I won't lie to you. It may
Wow.
sound like I'm a hater, but I'm being like I try to give people as like direct, honest advice. I will take time because I know it's not easy. It really isn't. And I've been there now. I get it. So in terms of evaluating startups, it's humility, realism. Um, and I think that realism is actually very important because back in the day, you would say, I want to say back in the day, I mean maybe 3, 4 years ago, someone comes to you with an idea, you're like, oh wow, okay, these guys can get 20% of the market, is an underserved market. See, someone once told me something recently that underserved markets, when you enter inside, you understand why it's underserved. You understand?
Understand why you're underserved.
Yeah, the challenge is there because the business cannot scale. You can't maybe there might be issues of the customer, knowledge, the amount of education required. You're almost trying to do infrastructure work. It's a venture company or for a startup. It's not your job. Not everyone can do it. Some companies, like, a lot of the time when behavioral change is one of the hardest things to make happen, right? For example, when we went from cash to POS, right? We're still a cash, Nigeria's still a very cash dominant country. But think about all the companies that had to die. I don't know if anybody has heard of Global Accelerates.
Global what?
Global Accelerates.
Sounds familiar.
GA. Yes, back in 2017, they were the leader in POS. Ask anybody now about somebody has come in, done it, and timing is everything. And you just enter at the right time. And everyone's like, oh my God, yes, why not? Why? Because five people have, it's almost like a bridge. Five people have laid down in order for you to walk past. Understand what I'm saying? So, yes, that realism is where before I think I could be more hoodwinked. Now my eyes are open. I know what's on ground now, so you can't fool me anymore.
And that's very, very interesting. I think that I really agree with what you said, right? You said that, I've heard it before as well, where people have said that if you hear that someone says, "Oh, it's an uncharted market. No one has gone there. We are the first in the market." It's first in the market because when you go there, you see all the dead bodies that are there.
Yeah,
Right.
exactly.
So so many dead bodies there lying, and then no one knows about them. It's quite interesting. But speaking about humility and empathy, right? About how in terms of how you now assess startups from this point of view at this point in time of your life. Now, it would be good to understand, right, how you balance conviction with risk as an early stage investor, right? Because, of course, venture capital is risk, right? And, of course, there's the part of conviction as well, right? But you've raised finance, you've raised money as a fund manager yourself, and you've promised the investors that you're going to bring 7x, 10x, 15x,
Yeah.
all of that. So how do you balance that conviction, with risk, especially because, with early stage investing, everything is uncertain, right? So how do you typically balance that?
So let me use an analogy here. I think what a lot of founders don't realize is to get funding, all investors need to see is a path. Nobody expects certainty, but there needs to be a path, right? And for example, I'm very numbers driven, right? So I think top down. So first thing, again, going back, my North Star as an investor is if everything goes right, how big can this be? I'm not going to take unnecessary risk to get 2x, 3x. You understand? Right? So if everything goes right, how big can this be? So at first, I'm trying to, get a sense of the market, right? Get a sense of the customer behaviors. How big of a problem is this person really solving? Right? Is it a problem that requires people to change their behavior? If they need to change their behavior, how resistant are they? No, nothing is ever a straight no. I just want to just make that thing clear. If there is a path, the path might be ridden with, there might be dragons on the path. But if we have a sword that we can use to slay that dragon, we're good. We'll take that risk. Understand what I'm saying? But it has to be surmountable. So first of all, I need to ensure that what's at the end of my path is I need to be certain there's a gold mine there. That's the first thing. Right. Second, I then need to document the risks. I don't know if anybody here boxes, but they always say the punches that hurt the most are the ones you don't see coming. Right. So I need to be able to document the risk. So is it regulatory risk? Is it key man risk? Is it price race to the bottom risk, like such that you're building a product that not anybody can build out of their backyard, right? Such that if you want to start competing with customers now, the way to do it is you reduce your price. I don't invest in those kind of businesses, right? So we need to spend some time understanding, is it founder risk? Is this a founder that has their head screwed on, right? So the thing is, first we identify the path. Then we see the gold mine. We say, okay, what's your customer acquisition strategy? Is it sustainable? I talk to other people. I'll talk to the customers you want to acquire. I'll go and talk to them. Not the ones you know, but what your customer looks like, right? So for example, Paddy, yeah, exactly, right? I'll speak to them. I'll speak to your competitors. I'll speak to regulators. That's how I do due diligence, right? If you might tell me that your price is 1,500 naira or 10% transaction fee, but the next guy next to you is charging 2% and you're struggling. What does that tell me? You're 15% today, but it's going to come down. And if it comes down, right, are you defensible? What are you doing differently? So to answer the question, right, in terms of balancing conviction and risk, the journey needs to be worth it for me first, and then I need to be able to identify what we call them kill switches. What can kill this business, and are they things that we can solve? If it's not something I can solve, I don't touch it. You understand? It doesn't have to be guaranteed that we'll solve it, but there has to be a pathway to solving it, right? So, and then the founder test is a big one. And people underestimate this when it comes to fundraising. People need to like you, right? Every time I talk to this guy, his shoulder always high. I've seen guys who maybe they've read pre-seed, seed, series A. Series B will jump for front now. By the time they call me and say, Saeed, what do you think about this guy? Man, I won't lie, I don't want to say anything. They'll say, say no more. People need to like you. They need to like you, honestly. So, are you a coachable guy? Like, I've done deals, like investing in companies where I've taken them out for a beer. Let's go and drink. Let me see who you are as a person. Do you understand? You pick my call. When I ask you questions, are you open to, I'm not saying if I tell you A or if I say jump, you say how high. No, no, no. Nobody likes that. But are you open to dialogue? Let's talk. And then the final thing is exit. Paper returns don't help anybody. Paper returns don't help our market. That's why today everybody shouts about Paystyle. How many people made money from Paystyle? Because it was tangible money, right? You've grown 10x, oh yeah, but who's going to buy? Nobody. I have to have a clear path to exit before I invest in your business. So that's how we balance conviction with risk. It all has to be worth it in the end. If we have to go through these dragons, we need to know that there's a gold mine at the end.
Interesting. Speaking about exits, right? I think it would be good to then segue into, of course, I'm not sure if everyone here is aware that Oui Capital here, was one of Moneypoint's investors, right? Basically, I think the bet on Moneypoint was very, very legendary, right? I'm not sure if you were there at that point in time when the investment was made.
No. That was way before my time.
Yeah, absolutely. So the point here is, just to give some context for everyone. So I think it was about $150,000 check, right? That returned the entire first fund. The first fund, I think by 8 times or something. I can't remember what that number was.
More than 8 times.
More than 8 times, you can imagine, which was just one company, right? So now the question here is, it would be good to really understand how, maybe first of all, to break down what exits even look like, right? So maybe I should infuse 3 questions into one, and I hope you're able to, and by the way, if you have questions, everyone, please feel free to, ask them, drop them in the chat section, so while we're going on, we'll read them. So yes, just to really explain the question now, the first one is, how realistic are exits in Africa? right? Now we talk about pay stack, but how many pay stacks have we seen? How many pay stacks have we seen on a year on year basis, right? So that's one. Number two is maybe even before that question, is it possible to just break down what? Because I mean, we have some early stage founders
Yeah,
to understand what an exit really means, right? It might be
yeah.
good to break down what an exit is, right? What's the expectation from an investor when he's investing from an angle of exiting the business? And now the third one is just to then understand, you know, now We Capital invested in Money Points, made that great bet that turned into, one of the best or most legendary stories right now in African VC. It would be good to also understand what is We Capital doing right now to find, maybe you could give us an insight, right?
All right, the
What is We
next.
Capital doing, yeah, to find the next Money Point at this point in time?
Okay. So
I hope it's not too much. Do you get the cadence?
I hope so the first question was around what exits look like. Is that
Yes,
correct?
yes.
So yeah, exits, I mean, let's demystify what exit is. Exit is always simply just buying your stake, right? So let's talk about what does that look like. So for a lot of people, exit is secondaries, right? So for example, I'm investing in this company, I own 8% of the company goes to raise a round, right? There are people who maybe they didn't get in, other VCs, by the way, when I say people. So I'm speaking from the context of We Capital. There are other investors who may have wanted to invest in the round, but they couldn't get in, right? They'll buy my
Mm,
stake. That is an exit. I've made money. There's cash on the table, right? Sometimes it is rarely ever happens IPO. Rarely
mm,
ever happens IPO. Again, that's someone else buying my stake because at that point you have investment banks who purchase your stake prior to listing. So because they know maybe the stock will pop when it goes public because there's so much demand for it, right? That's also an exit. Um, Sometimes it is there's a whole company takeover, or where not a takeover but an acquisition, right? As we saw with Paystack, right? Stripe acquires the whole company, right? That's also an exit. So the truth is, I find it's so interesting that I think Paystack was loud because of how many African VCs were all in there. But I'll tell
mm,
you what, the same year Paystack exited, we exited a company, Echo VC. It was quiet. The same, you guys know Cars 45, right?
mm.
Because I think that was
Yeah, of course, Castle 5, yeah.
yeah, that was 2020. We exited Cars 45 in 2020 in 2020. There
Wow.
was no there was no fanfare, no you know. So in terms of what we will see and what tends to happen the most, and we see it time and time again, is um, acquisition from larger players, right,
Mm,
within your sector. Or it doesn't necessarily have to be within yourself. Maybe you've built a product, you've built a strong product, you've built a strong customer base, and it's a potential add-on to your business, right? That makes your business or makes somebody else's business more sticky,
mm,
right? And increases the amount of revenue. And they don't want to do that work. They'll just buy you. A lot of guys want to expand. I have a new bank in Nigeria. I want to expand to Togo. I have money. There's a Togolese neobank. They're not too big. They're not too expensive. I can buy them. That's an exit to the VC investor, right? We'll see a lot of those sort of exits. But I would say the second most likely is the first I explained, which is as I own a stake, another investor wants to get into the round, and they just buy you up, right?
mm,
Maybe they couldn't get into the round, or maybe the amount they got
mm,
wasn't large enough for them. Maybe they got
mm.
7%, but they usually want 10%. You own 3% of the company.
Just
And
buy
they,
you up.
you know what? I'll give it to you.
Yeah.
Sometimes it's even just me as an investor. Let's say I have a a a company and I've made 15x on that business,
Mm,
right? I'm ready to 15x, like I said, paper returns doesn't do anything for anybody, right?
mm,
So I want to guarantee that I have returned maybe 2x my fund,
mm,
right? What I'll do is I'll tell another investor in that round, hey guys, I'm selling you. Do you want to buy?
mm,
Even the founders at that point might even decide they want to buy.
mm,
You understand what I'm saying?
mm,
So exits can happen in so many ways. Remove
mm,
IPO from your mind. Those those are those are few and far between. But you see
Mm,
those small wheeler dealer type transactions, they happen so when people say there are no exits in Africa, I'm like, what do you mean? People are
mm,
exiting all the time. My old
mm.
firm, I think I just did an announcement that they exited Tangerine Insurance
Wow,
Verod, right?
wow.
So exits happen all the time. It's just they're not all as loud as Paystack was.
Mm, interesting. So I think it's just maybe yeah. There's the PR around it, but do you think there's a part of the exit multiples as well with regard to how much money is the investor really exiting? Right? Are they able to? Is that because now, for example, for Money Point, it was able to return an entire fund. For Paystack, it was an exit that maybe was one of the most. It was one of the very first in the market at that point in time. So maybe that's why Paystack was very prominent. Yeah, I don't know if you get where I'm coming from. My point really is that
Yeah.
comparing the exits that happen on a very daily basis in Africa, like you've clarified now, the reason why we perhaps do not hear about it is perhaps maybe they are not as large as maybe it's just a one x return. Could that be the reason why?
Returns, uh, a lot of people don't actually share their returns, right? So the
Right.
returns itself would not necessarily have an an effect on whether or not it's loud or whether or not it's shared,
Mm,
right? So for example, yeah, you started saying 150K return of fund, but what's the return? I mean, I
mm,
know the return, I'm internal, but I'm not sharing that with anybody here. What they know is how, fund was returned and everyone's happy with that. So
mm,
as such, and I don't think returns, make too much of a difference in terms of how loud. It certainly makes a small difference because obviously when you return a whole fund of one bit, but people forget that's actually the VC model. That's
mm,
how VC is built for.
mm.
You invest in each company with the expectation that if 9 out of 10 fail, this won't return my fund.
On the entire thing.
Right. So what we've done is actually stayed true to the VC model, right?
Right.
And that comes from just price discipline. You understand, coming in at the right price. That makes a huge difference as well. So I think I answered your first question. You had a question before you spoke about how we're going about finding money points. I think there was a second.
Yeah, I think you
A
answered
second
everything
question.
together. You
Okay.
answered both.
Now,
So
in
good.
terms of how we find the next one, honestly speaking, I think it is putting your ears to the ground. And that humility is a very, very big thing. Humility and likability, right? Because people need to, even it's not just as a founder, as an investor, people need to like you. If a
Yeah.
deal is hot and, man, I don't want this guy on my cap table,
Mm,
this guy is difficult. You understand? So we make a point of being founder friendly,
mm,
right? And we make a point of we're straightforward. We don't do any, wheeler dealer, back room, what we say we're going to do is what we say, we won't agree to, discuss a term sheet with you and send you something else with a difference, where you're now surprised, right? I'll tell you what, let me give you a real life example. I
mm,
was negotiating a round with a founder 2 months ago, right?
mm,
And this is a founder that needs capital, right? Um, and I think, yeah, we're looking at a just north of 500K check. And
mm,
I think he wanted a $7.5 million post money valuation, which was already cheap,
mm,
right? I pushed for
mm,
700. And I think at first I pushed for 6 million.
mm,
I could tell that if I pushed hard enough, he would have actually taken it. But how does that benefit me? If
mm,
we start off our relationship and the guy is thinking it's because of
mm.
condition I took this guy's money. You understand what I'm saying? Right? But you actually want them to like you because once you write a check, yeah, your the relationship continues. You need to continue adding value.
10 years.
Exactly.
Mm.
But going back,
You VOG now.
sorry,
I think someone has the mic turned.
that's
Uh,
David.
David, yeah. Okay.
Yeah. So, when it comes to reputation, you need to safeguard your reputation.
Mm,
So when it comes to finding, there's nobody we don't talk to. I spend
yeah.
like 80% of my job is being on calls. I talk to
Right.
founders, I talk to regulators, I talk to customers, I talk to everybody, right? Other VCs, what are you guys seeing? Sometimes, a lot of times, I find a problem before I find the company that is solving it.
Mm,
You understand, right? So I've talked to there's a real problem in Zambia. Oh. Who's out here solving this thing? Yeah, let me talk to some guys on ground. Anybody investing in Zambian companies? So yeah, some it's almost like your job is being a detective.
Mm,
Do you understand? So let me give you a real life example. Let's say I'm looking for a company that's facilitating payments for to China,
mm,
for Chinese banks, right? I go to Zambia. I'm like, there's a lot of demand for this thing. Why are guys not running? They're not doing this. Okay, let me talk to somebody let's say I know someone at Launch Africa who has invested in a Zambian company. Please
mm,
introduce me to this founder, right? And I will tell him I'm very open. Like, look, you're not raising capital. I'm not talking to you because of your business specifically. I want to talk to you because of your knowledge of the market. Who do you know?
yeah.
Talk to me as a Zambian, right?
Mm,
What are the challenges? Okay, can you introduce me somebody who runs an SME, right?
mm,
Who do when you want to speak to China, who do you talk to? Who do you go to? You understand what I'm saying, right? So you spend all your time actually, you need to be on ground. There's
mm.
no sitting down on my laptop, checking my email, waiting for
Mm.
inbox, and waiting for the deck to come to me. You understand what
Interesting.
I mean? You actually
Interesting.
have to go out and be searching. Oh, yeah, Said, come and judge this one. Oh,
Mm,
yeah, I'm there, I'm judging. Said, come
mm,
and talk to these people. I'm there, I'm talking. Oh, yeah, what's happening here? And the thing is, the more people you speak to, the more you information you accumulate,
mm.
your 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 senses get sharper,
Yeah.
get faster. Like, this thing doesn't make sense. This one, there's something here. You understand what I'm saying? You get sharper,
Mm,
right? So yeah, you need to be on ground. You need to be, you know, talking to different people across different markets if you want to get there first. And it's not enough to find, like I said, reputation. They have to like you first. They need to, and on top of liking you, you also need to know your stuff in terms of value, right?
mm,
Okay, they've collected your check, but they want more than your check, right? They want to,
mm.
can you open up doors for somebody
Yeah.
in this place?
Yes.
Oh
Mm,
boy, let me start calling. Who do I know there? You understand what I'm saying? Can you
mhm.
do it? Yes. That's already the first answer, right? I'll start doing it from that yes. Yes, let me go and find a way. Any way now way. You find a way to get it done. You understand what I'm saying? That's the game. And that's how you find the next money points.
Interesting, interesting. Now, speaking about giving people or being on the ground, right? Like what you're doing now. What you're doing now, of course, is being you're here on the field with founders, doing all of this. Maybe we should just give the next money point in quotes here. Who perhaps has a question to ask you? So I don't take the entire time. I know that we are running very fast at this point. So if anyone has a question, you can just feel free to unmute yourself and ask your question. If not, I would go ahead to read some questions that we have here from the community. Some people already asked some questions. But yeah, if you have a question, just feel free to, raise your hand and, we'll bring you up stage. But there's a question here from someone who's asking that, so if you were to receive a deck from a first-time founder, so besides a team with big logos, what kind of traction rather, or slides will make you want to reply, right? In your opinion, what's the best way to build relationships with them months before? Now we're talking about relationships, right? And liking the founder, liking the investor. So yeah, I think beyond the big names, the big logos, right? What would make you want to reply with a founder that you have not known before?
Yeah. So, I want to say something, and I honestly, and it's a sad reality that I actually have to call out, right?
Mm,
There's an over reliance on
mm,
network.
mm,
And it's unfortunate, but at the same time, if I ask founders to give us a little bit of empathy sometimes, because think about how many pitch decks we get, how many introductions, right? A lot of the time, you a lot of the time you prioritize the ones that come from people like people that understand how you invest, right? Because they act as almost like a pre-screen. Because I know person A won't send me nonsense, right? It doesn't
mm,
mean I'm going to invest though, but it means I will look at it. And also, there's also the underspoken. If Joba, for example, if you send me a deck, and I'm looking at it and I'm thinking, okay, if I don't look at this deck, Joba is not going to be happy.
Mm.
That's what I'm saying. So as such, at the very minimum, I have to look at it, right? So and I say this, it sucks because that our market is still, you know, like, and it's because people forget how young this VC thing is in Africa, right? We've not been doing this for 10 years. You understand?
Mm.
Right? And a lot of guys are still trying to find their footing. A lot of guys want to raise additional funds. So as such, you need to do well, so you almost get it almost a risk averse. But going back to your question about what a founder can do, so if you're not coming through a trusted network, I would say do everything to not avoid being discounted, right? So first things first, your business has to make sense, right? And it has to be venture scalable, right? So you yourself should have done your math, right? And I think not a lot of founders spend time doing market sizing because if more founders did market sizing, they would know that a lot of their businesses are SMEs, not VCs. And SME, by the way, does not mean you're a small business. It means what it inherently it does. But when I say SME, I mean a business that is doing well enough, they're profitable, they're able to feed themselves, their staff, everybody's good, right? You can even still build house in Ikoyi on that sort of business, right? It's not $100 million valuation business, but there's cash flow. You understand? So I think a lot of founders spend time doing market sizing and understand that, okay, if I acquire 1% of this market or 10%, no, how many companies acquire more than 15%
Is it just me?
of a market or 20% of a market? So, hello, am I back? Sorry, did you guys lose me?
Yeah, I can hear you now.
Sorry, did you?
You're back. You're back.
Yeah. Yeah. So I think it's almost like check yourself first before you come to me. You understand, right? Look at your market size, right? Look at, okay, how realistic is it for you to, let's say you're doing lending, right, in Nigeria, right? And you started in Abuja. Let's say market size is $1 billion, right? If you ask yourself, and let's say that $1 billion is 100 or 1 million people transacting, so that means each person is collecting loans of 1,000 a year, right? Ask yourself, for this business to make sense, I need to be able to acquire, say, 1% of the market, right? And if I acquire 1% of the market, how big does my business be, right? 1% of 1 million is what? Pardon my 10,000 customers, right? Ask yourself as a founder, what is my pathway to acquiring 10,000 customers? Is it something I can realistically do, right? And if it is, put that pathway in your deck.
Very
Do you
great.
understand? Make it very clear. That goal, make it very clear to us that this is how we are going to get from, my current valuation today, right? To this is how I'm going to make you money. I think a lot of founders see them, they think they're looking for VCs for money, but they forget that we are also a business, right? Because we also have to, we have to return the money. So you also you almost have to you have to check your own self first, make it very clear in your pitch deck. And then I would say honestly, one of the things that catches my attention, and this is me speaking for myself, because sometimes I get like tons of emails. Check in, network. And this is something that, so regular check-in. So for example, you send me an email, right? I didn't respond. And it's never out of malice, right? I didn't respond. Send me an email in maybe a week after, hey, just bumping this up in your inbox. I'm like, you're right. I should have, you get reminded, right? Another thing is, even if you don't have a network, like you don't know anybody that knows a VC, start finding out. Like talk to Opolo Collective is there. Talk to, come in. There are other, you understand what I'm saying? Apply for these things, get into the ecosystem because it's hard. Like you're at that point, you're stressing yourself by trying to get into the ecosystem from outside, right? Enter the ecosystem, talk to guys, like, hey, can you do an intro to me? Da, da, da. warm intros, honestly, there are a lot of guys that get funding through cold intros, but the probability is just so much lower. Your deck, a lot of time, your deck, you might have the most fantastic business. That's the bare minimum, right? But you need us to see it, right? Do the networking, do that work, right? Introduce yourself. Okay, you can't reach this VC person because, and I don't know why people actually have that impression that VC, we're human beings like everybody else. If you stop, talk to me. Hey, how you doing? Da, 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 send me your email. No, voila. If you send me a pitch like there and then, I'll look at it. Schedule a call. Leave with a call. You understand? Have your elevator. When I was a founder, I had different lengths of pitches, right? I had my two-liners, right? And in that two-line, I'll tell you how you make money. Because at the end of the day, it's not about giving me money. It's let me tell you how you're going to make money. Let me tell you how you're going to return your fund. You understand what I'm saying? That's, I think, yeah. So I think to summarize, it is at the base level, like check yourself a little bit. Make sure that there's a clear acquisition path to making the VC money, right? 2, enter the ecosystem. Don't just sit in your house, and same way I can't sit in my house and be expecting deals. Those two hours be sending emails and expecting responses, right? Build that network yourself.
Awesome, awesome. I think okay. I can see there's a question. Someone has a hand up. That's Sharon. But before I go ahead to allow her to speak, I think that this has really been very insightful. I know that it's supposed to end by 6 p.m., but just to know if you're okay to go by another 15 minutes. Is that okay by you?
Yeah. So I even thought this was going on till 6:30. I thought it was fine.
Okay, amazing, amazing. We can then go on. Awesome.
Yeah.
So it looks like if anyone has another question beyond Sharon, she can just you can just come up. So yeah, Sharon, it would be good to see you. So if you can just unmute yourself, turn on your video and ask your question to Saeed. Yeah.
Hello, hi, good evening. I'm
Sure.
sorry, my video can't come on at the moment. I'm not sure what's going on with my device. Okay, so hi, Saeed. I'm Sharon. I am a benefactor actually from of Hadi Finance. Last year, Hadi actually financed a couple of our projects. So
I know who you are, Darren. I remember.
Yay! Great. Thank you, sir. So I was wondering if you could, because I have a startup. It's an IoT company, and this is the first time that I am actually raising funds. Actually, my team and I are trying to get into the Antler program at the moment. So at the moment, I am learning a lot. My colleagues actually have actually raised money in the past. One of them is a YC founder. So, but I'm the baby in the team and I'm learning a lot. I was wondering if you could tell me a little about what to look out for when choosing investors, because, like you said, as the investors are also looking out for us, we should also look out for the kind of
Yeah.
investors that we are collecting funds from. Are you going to not pick my call? Can I actually call you if I get into a struggle? So I was wondering if you give some pointers on that, and also how to manage rejection. Thank you. Those are my
Yeah.
questions.
So I think the first question around selecting investors, first of all, that is the place you want to be. You want to be at a point where you can pick and choose who you want on your cap table. Honestly, talk to other founders. That's usually like, because at the end of the day, no one's going to discredit themselves, right? Talk to other founders to get the real, is this founder supportive, right? Is this investor supportive? Is this someone that, if are they patient? If anything hits the fan, right? Are they going to find a way to collect my company from me, through yeah, I would say you'd be surprised because I don't mean to be there's so much bad behavior on all ends in that ecosystem, unfortunately. I think reference check is so big. Like there's nobody, even when you even goes beyond even selecting. Sometimes you can go through a process, and this is me putting my founder hat on, go through a process and realize that the person you've been speaking to for 6 months actually doesn't have any money. And you could have saved yourself that headache by talking to a founder like early on, and they would have told you, don't waste your time here. We've seen it, right? So, and also spend time with this person before you collect a check. Spend time with this investor. Like, talk to them about the business. Really make sure they understand your product. Make sure they understand your business. Because a lot of guys are writing checks just following. Right? From the question somebody asks you, you will know if they're switched on. You understand what I'm saying? So okay, this is someone that understands the end to end of my business. And then naturally there's also the other stuff, valuation terms. You can look at the guy who wants a participating 2x participating liquidation preference, for example, right? That is just who is found that's not even a friendly thing to have in a term sheet, right? Who is the person who has told you this is what they're going to do and done it? You understand, right? So that would be my advice. In terms of handling rejection, I'm, you know, I've been through it. I have a sheet, and I wish I could share it. When I was raising capital for Hadi Finance, I must have spoken to north of 100 different investors, debt and equity. And the nature of the game is that like every startup, 90% of people are going to reject you. Nobody is the darling of, especially at early stage, the darling of the VC industry, right? They're going to speak to Money Points, they're going to reject you. So you should also just prepare before you even, understand. Don't expect money. Is basically what I would say. And because if you don't have that expectation, you won't be disappointed when the money doesn't come. You understand? Right. That would be my advice. But sometimes it can get, I remember when I was in Lagos a few years ago, and I got a rejection from a VC firm, and I think at that point we run out of capital, right? So I was using my personal money to pay, telling guys, take a discount, hold on, we're coming, right? And I got one rejection from somebody I'd been talking to for 3 months, right? Um, it's tough, but I think you just have people in your life that are there for you, support you, because the founder journey can be a very lonely journey. That would be my advice.
Amazing.
Thank you so much.
Thank you, Sharon.
Awesome. So can we just take our media at this point in time? So maybe we'll just begin to round off. Our media, you can unmute yourself and maybe turn on your video as well. Are you there? Our media.
Oh, yeah. Good evening. Yeah,
Awesome.
I'm here, Mr. Joba. Yeah, good evening. Good evening, Mr. Saeed. Thank you so much. You've thrown a lot of bombs and valuable bombs, actually. And man, you've made I'm sure a lot of us here, our heads are sparking right now, and we're going back to the drawing board. So, my question, please, is let's say you are an agnostic VC and an e-commerce marketplace startup guy comes to see you, and this guy is he's trying to start this up in an underserved area, let's say underserved area, right? So what are those things based on your experience? Just break it down to us, sir. What are those things you would want to look out for, or you want to check from this guy, to then determine whether you want to go on with this person, or just tell the person, say, oh boy, don't waste your time. So yeah, that's it, sir.
Yeah. Again, my North Star and everything is how big can this be? And this your underserved area, right? And interestingly, one of some things that shows you how, that tells you how big something can be is traction. I know you guys, every founder here has heard traction, 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 traction. I know how many times I got rejected, not enough traction, right? So really and truly, underserved area, e-commerce product, I would want to see how your historical, if you have traction, that's perfect. I'd love to see how your historical customers have behaved, how many have churned, is average order value going up? Is it going down? I would visit your area, wherever that underserved place is, and talk to the customers there, people who are using the product, right? People who are not using the product. Why are they not using the product? Now, if you have zero traction, you're at the idea stage, is market related, right? I would still want to understand what is this e-commerce, what specific vertical, or maybe it's, are you e-commerce for phones, right? Is it clothes, or is it, are you Jumia, basically, which is, and I'd want to speak to people in that area, and even like other competitors. You may not have competitors in your area, but I'd want to know what other e-commerce players, why are they not serving that area? Is it low purchasing power? Is it high amounts or maybe infrastructure in that area makes delivery difficult? So as such, you're spending, spending the cost of delivery 3 times to deliver to one customer once. You understand what I'm saying? I would spend time just trying to understand the nuances of your market. If you don't, like, the surest way to know that is traction, right? Because I can look at the past and see how your customers have behaved, right? But in the absence of that, it's just spending time trying to just know the market, understand the purchasing power of the residents of that area, understanding the laws of that area, country, whatever that is, understanding why people are not, why is that market underserved as of today. I don't know if I've answered that question.
Absolutely, I think you have.
Uh,
Yeah. Mide?
yeah, you did, sir. So you did quite a justice. Thank you.
Awesome. So we'll
Thank
take the
you.
last one for the day from Olasukumi. And you can go ahead and unmute yourself and maybe turn on your video if you can.
Yeah, thank you very much. Hello everybody. Thank you for the advices you've been giving, Mr. Saeed. I'm a greenhorn here. Like, this is my first time here. I was talking to my friend now, like, oh, I'm looking for investors, and he just sent me the link that this meeting is going on. Like, and how I go, like, if you can still meet up, you can talk to them. So I just said, let me hop in and come and say something.
Yeah.
So I'm a greenhorn here, so all the advices you've been giving there, I'm like, oh, this is very cool. This is very calm. I'm not new to starting a company though, because I've started like a media platform for fashion, which is like Primaries Africa. It's like one of the biggest media platform in fashion in Nigeria right now and Africa, because we basically deal with fashion brands in Africa. And that's not what I'm looking for investors for. We've never looked for investors for that. We built it out, me and a couple of friends, we just built it out from the ground up by ourselves. But now we're building it's a production facing platform. And because like the way the world is going now, AI and all those stuff, they can do a lot of techie stuff, but production will never be taken away. And I did an evaluation of the textile industry in Africa. Is like 5 billion plus in Nigeria only. That's like I'm just talking about Nigeria only. We have like a 5 billion plus textile industry. And working directly with fashion brands from Nigeria and from Africa, we've had requests from a lot of brands from Africa, from South Africa, Kenya, all over Africa reaching out. Okay.
So
Sorry.
is it a question?
Yeah, I'm leading to a
pitch.
question. Yeah, this is a build up to a question.
Right.
I'm sorry.
This
is a build up. Yeah. I'll just try to take like a very few times. So yeah, we've had like different people reaching out to us from different parts of Africa saying, oh, they need like production services and all those kind of things. So we started a company that offers that, and we've been working, we've been scaling basically, very little steps, but we've been scaling by ourselves. And the question I want to ask you is, if I want to pitch to you, because I got in here very late, I got in here like 15-20 minutes ago. So if I want to pitch for investment to you, like how do I get to you, how do I reach you, how do I present my pitch to you, because we have everything, how you can make back your money, all those things, like everything we've already documented everything. So I just need to know how to get to you with that. That's my question. Sorry, and thank you very much.
Let me before you go, let me ask that question. When you say production, what are you producing?
So textile, apparel, textile.
Yeah. Okay, I thought so.
Apparel. Yeah.
This is something that I want to also say to every single founder. It's very important you match your business to the right type of investor. And I think, because we're a tech enabled VC firm, right? The reason why we like tech is generally because of how scalable it is. It doesn't mean one business is better or worse than the other. It just means that, so for example, when I think about manufacturing, the first thing that pops into my mind is CapEx, right? Because bear in mind, I came from private equity where I used to invest in manufacturing companies, right? And I've actually helped a textile production company.
Yeah,
Sorry?
I think someone is muted. It's okay. Go ahead.
Yeah. And I've actually helped a textiles production company actually raise capital. When I was at Equity, they came to me and I explained to them that, we don't invest in a textiles manufacturer, but then I pointed them to who does, and they got 500K, right? So point being, there are folks who invest in your business. Like We Capital, we don't tend to be one of those, right? Or we're not. Let me be honest. We tend to avoid companies that require capital expenditure in order to scale. It's not a hard or fast rule, but that exists. So that is one advice I would actually give to all them. You can't be a pre-seed company pitching to a Series A company. You're a pre-seed company, but you're pitching to a company that's the $200 million fund that writes $5 million checks upwards. You're a pre-seed company. They're not going to invest, right? So, but generally speaking, Sukomi, I think maybe the bit you missed was around, building your network. It's a lot easier to reach investors when it comes from a warm intro. It doesn't mean you can't. It's just from a probability perspective, it's just a lot easier. So that's why collectives like Opolo exist, right? Such that you are actually able to leverage their existing network. And they can also, advise you on, okay, We Capital, probably not it. Maybe these guys are the guys you should actually be talking to, right? So it's a networking game. I think you can't sit at home, and I think what you said, if you've done all the work in terms of, you know, um, payback period or whatever. I don't know what security you're raising with, but if it's equity, just straight priced round, payback period, you have your cash flow, maybe you're paying back from cash flow from the business, then it means that you're ready to fundraise. It's just now getting into the room, being what's the word? You need to be resilient. So sometimes, you push an email to me, and then maybe I don't see it. You send a response, bump it up in my inbox in 1 week. Don't make the rookie mistake of sending an email every day, but bump it up in 1 week, in 2 weeks. Hey, and then sometimes it's just maybe I just haven't seen it, right? Yeah, so that would be my advice specifically. To you, I would say make sure you're looking for suitable investors. People who we've never invested in a textiles manufacturing. We've never invested in a manufacturing business, full stop, right? We tend to be more focused on distribution, right? So when we say tech enabled, like guys, like if you think about MoneyPoint today, MoneyPoint doesn't manufacture its POSs, right? There's no plant somewhere where they are manufacturing the POSs, right? But what they've cracked is distribution strategy, and we see that as scalable.
Awesome.
Thank you very much.
Yeah, awesome. So I hope that that advice, with that, Sukomi, you can go ahead to join. I'm not sure you're a member of Opolo Collective, so I think you can just go
No,
ahead.
I'm not. I'm definitely going to join now. Thank you very much.
Right.
You're
So,
welcome.
yeah, I think this has been a very insightful session, and unfortunately, we have to put it to a close at this point in time, just so we don't, go over the mark. So, for the guys who have questions and are unable to ask right now, we will just advise for you to go on the group to ask your questions, and of course, we will see how to, sort of get them to Saeed to maybe answer at his own, his own convenience. So, at this point in time, we'll just say a very big thank you to Saeed for having us today, for coming to speak with us today, to speak with the members of this collective. And I think that this is only the beginning of many other things that we'll do together, right? And yeah, thanks for all your efforts for the ecosystem. I think I'll just bring Blessing back up at this point in time to continue for us. And yeah, maybe if there's any word or anything that she wants to include. Blessing, you can come back up stage, please. Thanks a lot, Saeed, for coming today.
You're welcome, Joba, and thank you very much for having me. And I hope I've been able to reach, it's something that I find very important when I go back to talking about, why we do this or why I do this. But I hope I've been able to reach founders and, the way folks think about funding now, you think about it with a bit more insight. And hopefully that improves the odds of not just getting funding, but building sustainable companies on the continent.
Absolutely. I can see all the reactions on the, in the chat and, on the screen. So I think it's been a very good one. So yeah, thank you very much, Saeed. Blessing, over to you at this point.
All right, Joba, thank you so much. Thank you very much, Saeed. That was actually very, very insightful. And I'm sure a good number of us here have learned something, on how to think like investors and position our startups for whatever it is that we are aiming for. So, and I hope that every one of us on this call is living with clarity, with ideas that we can apply, and with confidence to take our startup or our products to the next step in our journey. And I just want each and every one of us to continue the conversation in the community. If you're not yet a member of the Opolo community, the link to get request access is already in the chat box. Just request access, and then we'll add you to the community. We have other founders there as well. We have other mentors, people that you can, collaborate with. You can get sponsorship. If you have an event, you can get speakers from the community. Like, it's a whole lot. Just like I mentioned earlier, it's a peer-to-peer support group for founders. All right, on to the next one. I just want us to keep building, keep pushing, and to remember that yes that you are looking for from that particular investor is closer than you think. And if you would like to connect with Saeed or with Joba on LinkedIn, feel free to, send them a LinkedIn request, follow them, and connect with them. Thank you very much, everyone, and I do hope we enjoy the rest of our evening. Thank you, Joba. Thank you, Saeed. Thank you, everyone.
Thanks, Saeed. Thanks, Nelson. Bye.
Bye.
Thank you all. Bye.